Here are your breaking top reverse mortgage news stories for the week of April 20th, 2020. Just one short month ago, the American economy appeared to be firing on all cylinders with low unemployment and a growing GDP. But today, economies across the globe have come to a grinding halt. That is, billions shelter in place and businesses close in the effort to stem the tide of the coronavirus pandemic. So, is there a silver lining? The Econotimes sees one in their most recent post. While the traditional mortgage market and banks are tightening their mortgage and lending standards in light of economic uncertainty, there is actually an upside for our industry. The column reads in part, many analysts believe the reverse mortgage sector of the loan market might be poised for growth. Part of the reason is that older Americans are seeking to protect their assets to stay ahead of a massive economic downturn. Just like traditional mortgages, the owners of high-end homes see these instruments as a way to protect their cash in uncertain times, and these funds can then be used to help offset unexpected costs tied to the country being shut down. And here's yet another reason for measured optimism. Those of you watching know well that your loan pricing has dropped suddenly and precipitously, and that's left you with smaller compensation for your closed loans, and also higher margins for new HECM applicants. However, improvement could be on the horizon, that according to one industry expert. But first, let's examine the present state of affairs. During Reverse Mortgage Daily's Secondary Markets webinar, which was held just last week, Longbridge CEO Chris Mayer said this: anything that we and other HMBS issuers had on our balance sheet that we had bought had basically collapsed in value. We're still in a market condition where prices are at least 2 and 2.5 to 3 points lower than they were in February, said Mayer. Now, for viewers who were originating back in the housing and economic crisis way back in 2008, the pricing collapse comes as no surprise. Now for the silver lining. Freddie Mac, that is the Federal Home Loan Mortgage Corporation, has signaled that they have some confidence. In fact, they're revising their forecast for the U.S. housing market, and they did that last week. New View Advisors partner Michael McCauley said, as recently as last Tuesday, Freddie Mac released information that they believe the recovery is going to start in the second half of 2020. He said that on the conference call with RMD, and he added, while they see a drop in home sales in 2020, they're actually projecting an increase in home sales in 2021. That home pricing stability ultimately bodes well for the secondary markets, and also more specifically for HECM mortgage-backed securities, or HMBSs as they're known. Reverse mortgages are getting a second look during the pandemic, wrote Phil Hall, that in an April 14th column in Housing Wire, if you haven't seen it. We've reported in this show and also in our weekly podcast anecdotal accounts of increased consumer interest in extracting home equity with a reverse mortgage, yes, even during the COVID-19 crisis. Many of our borrowers are in the eye of this hurricane, said Scott Norman, Finance of America's VP of Field Retail and Government Relations. He added, they are certainly concerned with their financial health and their ability to age in place in the coming years. I think the deeper answer to the question is, what are they going to do to hedge their risk during these vast market movements? And many of them are turning to the safety and security of reverse mortgages, said Norman. He also added that they are seeing reverse mortgage inquiry levels that they have not seen in 3 years. Let that sink in. Now, despite the common misunderstandings and perhaps misgivings that many older homeowners do hold about the reverse mortgage, it appears that economic concerns once again do open up a meaningful dialogue and also the opportunity for consumer education. So in conclusion, this week's top stories, while revealing the undeniable challenges that our nation faces and also our industry, do reveal an increased appetite to find the means to stabilize cash flow and preserve existing assets or investments. Now is the time to call those homeowners who were not ready for a reverse mortgage, whether it was last year or just last month. Also, many financial professionals who have been lukewarm about the reverse mortgage or the concept of utilizing home equity could be more receptive now that they're seeing their clients scramble for sources of cash flow. In addition, your local media outlets are looking for helpful segments that are related to the pandemic and that could be on finance. So now is the time to contact your local television station news director, your paper's business director, and local station manager. So what are your thoughts about this week's top reverse mortgage news stories? You can leave your comments below, and there are many fellow professionals who could benefit from today's segment, so why not share it with them using the social media links found on this page. Thanks again for joining us, and be sure to return next week for more reverse mortgage news, commentary, and analysis. Have a safe and productive week.